If your Social Security check looks different this month, there's a very real reason for that, and millions of Americans have no idea what just changed. Starting in May 2026, the SSA has officially locked in a 2.8% cost of living adjustment across the board. That means retirement benefits, SSDI, survivor benefits, family benefits, and SSI are all affected. The average retiree is now pulling in $2,071 a month. That's $56 more than last year. But here's what most people are missing. The maximum monthly SSI benefit just jumped from $967 to $994 for individuals and from $1,250 to $1,191 for couples. On top of that, SSDI recipients who are non-blind can now earn up to $1,190 per month before their benefits are at risk. That's a $70 increase from last year. And if you're 65 or older and filing taxes, the government just handed you something huge. A brand new $6,000 tax deduction that could reduce or completely wipe out the taxes you owe on your Social Security income. November 2026 also marks the final step in raising the full retirement age to 67 for anyone born in 1960 or later, a 42-year process that is now complete. Every single one of these changes affects your monthly income, your tax bill, and your future benefits. And if you don't know the details, you could be leaving real money on the table. Stay right here, because we're breaking down every single change, number by number. So let's start from the very beginning, because there is a lot happening this month that directly affects your wallet, your benefits, and your peace of mind. And honestly, the reason most people feel confused or anxious about Social Security right now is not because the system is broken. It is because nobody is sitting down and explaining the full picture in plain, simple English. That is exactly what we are going to do together right here, right now. So whether you are already receiving your check every month or you are planning ahead for retirement, every word of this video applies to you. Let's talk about May 2026 first, because this month is genuinely different from a timing standpoint, and a lot of people woke up worried. The Social Security Administration confirmed that there are no changes to the payment structure in May 2026. The longer wait between April and May payments is caused purely by calendar alignment. So if you felt like your money was late, or you heard people online saying Social Security is being cut or delayed, you can breathe easy. That is not what is happening. What is happening is that the calendar just fell in a way that created a slightly longer gap than usual. In some cases, that gap can extend to approximately 35 days, but this is within the normal operating range of the Social Security system, where intervals typically vary between 28 and 35 days. The money is still coming. The full amount is still coming. The only thing that changed is the calendar, not your benefit. Now, for those of you who want to know the exact dates, because planning your bills and your groceries around your payment date is serious business, here is how May 2026 breaks down. The SSA distributes retirement payments across 3 Wednesdays grouped by the beneficiary's day of birth. Those born between the 1st and the 10th of the month receive their payment on Wednesday, May 13th. Those born between the 11th and the 20th receive it on Wednesday, May 20th. And those born between the 21st and the 31st are scheduled for Wednesday, May 27th. Write those dates down. Stick them on your refrigerator if you have to. Because knowing your exact date removes the anxiety that comes from just watching your bank account and wondering when the deposit is going to land. And if you are someone who started receiving benefits before May 1997, your payment typically arrives on the 3rd of the month. That system has not changed for you either. Now, here is something that a lot of people do not realize about SSI specifically. Supplemental Security income payments will remain on schedule for May 1st, completely unaffected by the calendar shift impacting standard Social Security payments. So if you receive SSI, your money arrives on the 1st of the month just as it always does. If you happen to receive both SSI and regular Social Security retirement or disability benefits, you actually get 2 separate payments. SSI on the 1st and your Social Security on the appropriate Wednesday based on your birthday. That is a detail that a surprising number of people are not aware of, and it can make a big difference in how you budget for the month. Now let's get into the changes that really matter, the actual dollar figures, because that is what people care about the most. The 2026 cost of living adjustment came in at 2.8%, which is slightly higher than last year's 2.5% increase. Now, some people hear 2.8% and roll their eyes and think, that's nothing. And honestly, that frustration is completely valid. In a survey conducted by AARP, 77% of older adults said that a 3% COLA for 2026 would not be enough to help them keep up with rising prices. That is a huge number. That is nearly 8 out of 10 seniors saying they are still feeling squeezed even after the raise. And they are not wrong to feel that way. Inflation has hit groceries, prescription drugs, utilities, and rent particularly hard for people on fixed incomes. But even though the COLA is not perfect, it is real money, and you deserve to know exactly how much more you are getting. According to the Social Security Administration, the 2.8% increase translates to an additional $56 per month for the average retiree, bringing the average monthly check to $2,071, up from $2,015 in 2025. Married couples see an average increase of $88, raising their monthly benefit to $3,108 from $3,120. Now, $56 a month might not sound like a fortune, but that is $672 more per year going directly into your pocket. For a lot of seniors, that covers a utility bill, several weeks of groceries, or a prescription copay. It adds up. And for disabled workers receiving SSDI, the average disabled worker can expect an increase of approximately $44 in monthly benefit payments as a result of the 2.8% COLA. Every dollar counts, and knowing your new amount means you are not leaving anything on the table. Let's talk about SSI specifically, because this program is often misunderstood and underused. Supplemental Security Income is not the same as Social Security Retirement or SSDI. It is a separate program designed specifically for people who are elderly, blind, or disabled, and have very limited income and resources. You do not need a work history to qualify for SSI. That is a critical distinction. In 2026, the maximum monthly federal SSI benefit for an individual has increased from $967 to $994. The cap for a married couple has increased from $1,150 per month to $1,191 per month. That is nearly $1,000 a month for an individual just from the federal benefit alone, and many states actually add supplemental payments on top of that federal amount. If you are not sure whether your state adds extra money to your SSI, it is absolutely worth a phone call to your local Social Security office or a quick look on SSA.gov because you might be getting less than you are entitled to right now. Now let's shift to SSDI, Social Security Disability Insurance, because there are changes here that working-age people with disabilities and their families need to understand clearly. One of the most important thresholds in the SSDI system is called Substantial Gainful Activity, or SGA. This is the income limit that determines whether the SSA considers you capable of supporting yourself through work. If you earn above this limit, the SSA may decide your disability is not preventing you from working and your benefits could be at risk. In 2026, if you are a non-blind SSDI recipient, you can earn up to $1,290 per month without your work being considered substantial gainful activity. That is a $70 increase from the 2025 level of $1,620. For those receiving SSDI due to blindness, the limit is $2,830 per month, which is $130 more than in 2025. These increases are important because they give SSDI recipients a little more flexibility if they are trying to test the waters of returning to work without risking their benefits. And speaking of testing the waters, if you are on SSDI and you want to try going back to work, there is a program specifically designed to let you do that safely. It is called the Trial Work Period. For 2026, the trial work period earnings threshold has increased to $1,110 per month, up from $1,160 in 2025. This allows SSDI beneficiaries to earn above that amount for up to 9 months within a 60-month window while still receiving their full benefit. Think about what that means. You can actually go out and try working again, test whether your health allows it, earn a paycheck, and still keep your SSDI check coming in while you figure it out. That is a genuine lifeline for people who want to work but are afraid of losing their benefits if things do not go as planned. Once you use up all 9 of those months, your earnings are then measured against the standard SGA threshold we just talked about. Now, there is something happening on the tax side of Social Security in 2026 that could genuinely change your financial picture, and most people have not heard about it at all. A new tax break for people ages 65 and older could reduce or fully offset the taxes owed on Social Security income for millions of older Americans in 2026. The new deduction reduces taxable income by up to $6,000 for eligible individual taxpayers, and it was introduced through legislation Congress passed called the One Big Beautiful Bill. Here is why this is a big deal. For decades, millions of seniors have had to pay federal income tax on a portion of their Social Security benefits. That has always felt deeply unfair to a lot of people. You paid into this system your entire working life, and then the government turns around and taxes the money you get back. This new deduction does not eliminate that completely, but it pushes a significant number of seniors below the threshold where their benefits become taxable at all. Individual filers must be at least 65 and have a modified adjusted gross income under $75,000 to qualify for the full deduction. Joint filers must both be at least 65 and have a combined MAGI under $150,000. If you fall within those income ranges, talk to your tax preparer about this immediately, because it could mean real savings when you file your 2026 taxes in 2027. There is also a major milestone happening in November 2026 that affects every single American born in 1960 or later, so if that includes you or your children who are planning their retirement, pay close attention. In November 2026, the full retirement age will officially reach 67 for those born in 1960 or later, marking the final step in a 42-year-long process of gradually raising the retirement age from 65 to 67, initiated by the 1983 amendments to the Social Security Act. This process started before many people were even born, and it is now complete. What this means practically is that if you were born in 1960 or later and you claim Social Security before age 67, you will receive permanently reduced benefits. The earlier you claim, the more your monthly check is reduced, and the longer you wait, up to age 70, the larger your monthly check becomes. Someone who claims at 62 in 2026 receives a maximum of $2,169 per month, while waiting until full retirement age of 67 brings that maximum up to $4,150 per month, and waiting until age 70 raises it all the way to $5,181 per month. That difference between claiming at 62 versus 70 is over $2,200 more every single month for the rest of your life. If you are healthy, if you have other income to live on, and if your family has a history of longevity, delaying your claim could be one of the most financially powerful decisions you ever make. Let's also talk about something that directly affects how your benefits are calculated over the long term: work credits. This is a topic that confuses a lot of people, but it is actually pretty simple once you understand it. To earn one credit in 2026, you must have wages or self-employment income of $1,890, and you must earn $7,560 to get 4 full credits. This is up from $1,210 per credit in 2025. You need 40 credits total over your lifetime, which for most people means about 10 years of working, to qualify for retirement benefits at all. This number creeps up every year in line with national wage growth, which means younger people entering the workforce today will face slightly higher thresholds each year. If you are someone who took time off to raise children, care for a family member, or deal with a health issue, it is worth checking your Social Security statement to see exactly how many credits you have and whether you are on track. You can check this for free right now at My Social Security at SSA.gov. And here is one more thing that every single person watching this needs to hear, because it applies to everyone regardless of age, regardless of which program you are on, regardless of whether your check is $800 a month or $4,000 a month. Creating an account on the official Social Security website at ssa.gov gives you instant access to your payment information, your payment history, upcoming payment dates, your benefit amounts, and the ability to update your contact information, all available 24 hours a day, 7 days a week. If you have not set up your free My Social Security account yet, please do it this week, not next month, this week. Because the SSA sends important notices, benefit updates, and COLA information to that account, and if you are not checking it, you may be missing information that directly affects your money. And if technology is not your thing, that is completely okay. You can call the Social Security Administration directly at 1-800-772-NARA-13 and speak with a real representative who can answer your questions and confirm your payment dates. The bottom line is this: 2026 is a year of real, meaningful changes to Social Security, SSI, and SSDI. Your monthly benefit went up. Your work incentive thresholds went up. There is a new tax break sitting on the table that could save you hundreds or even thousands of dollars this year. The full retirement age has reached its final destination, and your May payment is coming on schedule. It just follows the calendar. None of this is something you should have to figure out alone, and none of it should feel overwhelming. Now you know exactly what changed, exactly what it means for you, and exactly what steps to take. Share this video with someone you love who is on Social Security, because this information belongs in every household.